Good day, subscribers. Thank you so much for joining me today. I am Jeremy, and this is the Financial Education Channel. Today, we're talking about the top 5 mistakes that experienced investors make. Yes, experienced investors, people like me, we absolutely still make mistakes. I'm going to go over the 5 biggest mistakes that I see, not just myself, but other people that are also experienced make these mistakes, and sometimes time and time again, unfortunately. So I've done quite a few videos in the past about like top 5 mistakes or top 10 mistakes beginners in the stock market make, because obviously beginners are going to make more mistakes than anybody because you're just kind of getting involved. You're just kind of finding out what to do. But experienced investors, I'm talking people that like minimum 3 years of actual stock market investing experience. Like those are the kind of people I'm talking about. People like myself that have been in this game for like 9 years now, buying and selling stocks. What do we make for mistakes? Let's just go ahead and get right into this. Leave a thumbs up if you guys enjoyed today, and leave me any comments if you have any questions or you got something to say about the video. Let's get into this. So number one, first mistake experienced investors make is what I call the deja vu effect. What is a deja vu effect? Well, first off, have you ever experienced deja vu? It's like an out-of-body experience when you go somewhere or you're in a situation and it feels like you've literally done that exact same situation before, and you've been there and you've done that, and it's literally like an out-of-body experience. It happens to me every once in a while. It's really rare, but it's a freaky feeling. So what I mean by a deja vu effect is this can be a good thing and a bad thing sometimes. What it will allow is sometimes it will allow somebody that's an experienced investor to see a company and be able to see the vision really well for that company and say, I've seen this before, this is going to be a success. And sometimes that's a good thing, but sometimes it's a really bad thing. Sometimes you can see a company and you can relate it to some other company from the past that maybe did good, and then you think, well, that company's going to do good. Well, if the next Facebook type app came out, right, and let's say it had a rough IPO and it dropped 50% 6 months later, just like Facebook did, some people would say, oh, that's the next Facebook, just because the stock market move similarity is similar, so maybe that will continue to go that way. And this happens time and time again. Also, on the downside, this can happen also a lot. Like some people will see, oh, that stock, is similar to ABC stock that got killed, and so therefore that stock's never going to be anything. That's going to be the next one to go down massively. And sometimes that's just not true. They're two different companies. You need to judge it off of a lot more things than just, oh, this reminds me of such and such company. Oh, this reminds me of such and such company. Oh, they're in consumer electronics. Oh, they're doing kind of like an Apple type style to their marketing. Therefore, they're going to be the next Apple. Hell no, that doesn't mean that they're going to be the next Apple. Oh, they have a social media networking type thing that's a little bit similar to Facebook. They're going to be the next Facebook. Absolutely not. There's a lot more to it than just, oh, it reminds me of this past company, so therefore it's the next company, guys. So deja vu effect, it's the number one mistake experienced investors we make. Number 2 mistake is seeing nothing but flowers or clouds. So what happens is experienced investors have been in a market, and sometimes they'll be in a big bear market for a while, or they'll be in a big bull market for a while. They either see all flowers or all clouds sometimes, because what you experience, especially if you're in a bull market for a long time, you can think it's just going to be like that forever. Like, oh, it's been a bull market for so long, it's just going to keep continuing on. Things have been great for so long, all I see is flowers. And actually, I see a lot of this right now as we're talking. I see a lot of this in the stock market right now. People just seeing flowers and nothing but flowers right now. And I also have seen it in tough markets, like when I first started investing, those first few years of me investing, there was so much double dip recession talk, everything's so bad out there, look at the unemployment numbers, look at this, look at that, and everybody was just seeing clouds, and no one saw that there are flowers sprouting all over the place. It's time to go pick those flowers, and that's what I was doing. So you gotta just, whatever type of market you're in, don't get sucked into that market so much where that's all you see. You gotta understand, when you're seeing flowers, you need to see some clouds out there, and when you see some clouds out there, you need to see some flowers. And I feel like it's part of my job to make sure everybody's on that same page, which is why I've done a video last week about, talking about some of the overvaluations of some stocks and things like that, because I got to bring some cloud cover, because I feel like way too many people are just seeing flowers right now and nothing but money. And it's almost part of my job now to make sure when everybody's too up, I need to bring them down a little bit, and when everybody's too down, I need to bring them up a little bit, because you should be more even keeled than ever before. Number three is thinking they are good at everything. I've experienced this tremendously. In 2014 is when I started really experiencing this. I got great gains year after year, 30, 40% year after year after year. And I thought I mastered the stock market. And now it's time to do something else. I got to even up my gains even more. 30 to 40%, that's not enough now. I need to get 80% a year. Oh, I can do 100% a year. I can now do this thing called short-term trading where basically I'm going on margin. I'm investing huge into companies for their earnings. I have an idea of what their earnings will be because I have a lot of different things I look at that can kind of give me an idea of what their earnings will be and whether they'll beat numbers and those kinds of things. And then I would do that and I would screw up and sometimes I was right. Actually, the majority of the time I was right, but then maybe guidance was weak or whatever. I thought I was so good at what I did, so now it's time to go out and master something else. And it was absolutely a mistake because I needed to stick to what I was good at. Like, just because, let's say you make it to the NFL, right? You're an NFL player. Doesn't mean, okay, now I'm in the NFL, now I need to go try to be an NBA player too. Like, we have seen some athletes who did that. Remember Michael Jordan tried to go play Major League Baseball and kind of failed. And we've seen, I think Deion Sanders tried to do it and some other people. Like, just do what you're good at and stick to what you're really good at. And what you're great at, stick to what you're great at. And don't worry about all that other mumbo jumbo. Stick to what you're great at and just leave that other stuff alone. But a lot of times, experienced investors, we think, okay, now we mastered this, now we can go do this, now we can go do this. And it doesn't work out that way. It just absolutely doesn't. Number 4, experienced investors, I'm specifically talking about some of the older ones that have been in the market 15, 20, 25, 30 years. A lot of them ignore new style companies. We have new companies coming in, with IPOs all the time that have new visions, new strategies, new products, new services that have never been talked about before. And what you have is you have a lot of those experienced investors that just write those companies off. I don't understand that. I don't want to invest in that. And there's a huge difference, and I've never really explained this before. I always talk about don't invest in companies that are outside of your circle of competence, okay? Being outside of your circle of competence doesn't mean I don't understand that because I looked at it for 5 seconds, I don't want to invest in it. No, that means you've looked into depth about that for days, if not weeks, and you still don't fully understand it. If you looked into something for days or weeks and seriously did it and worked your ass off and tried to understand everything about that and it still isn't really there for you, then it's outside of your circle of competence. But if you spent 5 minutes on it or you just heard from your son or your daughter or whatever, oh, this is a new hot thing and I don't understand that, so therefore I'm not going to invest in it, that's a loser's mentality in the end. You got to work your ass off. You got to try to figure out that. The reason there's certain industries I don't invest in, the banking sector is one of them. I've spent weeks of time, if not months of time, over time, reading annual reports on banks, trying to understand the banking industry. And do I understand the base fundamentals? Yes. But do I understand it enough? Is it in my circle of competence enough for me to really say, this bank is going to double in the next 5 years, or I can see them, raising their revenue by this much, or profits, or this and that? No, it's not. So therefore, it's not for me. But I've worked my ass off to get to that point where I'm like, it's just out of my circle of competence. Not like, oh, there's that thing over there. Oh, there's Snapchat. I don't understand Snapchat, so therefore I can't invest in Snapchat. I don't understand how Facebook makes money. I can't invest in Facebook. I don't understand, whatever stock. I don't understand Twitter. I can't invest in Twitter or whatever. That's a loser's mentality. If you worked your ass off and you try to understand and you still can't, then it's fair game. It's fine. Don't invest in it. But don't just, it's a new thing. Number 5, last one here. Number 5 is forgetting their core investing strategies. Forgetting what's at the core. One of the reasons I wrote the book, other than to obviously, sell something to my subscribers because I have nothing else to sell, is also so I can look at that book whenever I want. And I'm constantly reminded of my core investing strategies because I even forget about them sometimes. I can get caught up in the market when you're doing it for years and years. You can get caught up in the market and just forget what are the core fundamentals you really look at when you invest in a company. So now I have this book literally beside me every single day at this desk that I can pop open whenever I want. And when I'm looking at a stock, I can say, okay, Jeremy, you like that, but does it really hit your core investing strategies? Does it really do all the things you're looking for in a company? Does it really do what has made you successful in the past? And then if it does, great. So that's a huge thing there, guys. A lot of people that have just been investing a while, they just forget, some conveniently forget, or just literally actually forget some of their core investing strategies that have made them successful over time, and they get caught up into something just because they like it a lot, and they don't realize, wow, this doesn't even fit my second strategy. This doesn't even fit my fourth criteria I look at, my eighth criteria I look for in a company. Why am I invested in this? So never forget your core investing strategies. And I would consider, if you don't write a book, like just write on a piece of paper like the top 5, 10, 15 things you look for when you go to make an investment, and keep those close by you. Put them on your desk, or put them under your desk, or wherever you need to put it under your pillow if you have to. And don't forget those core things, because you're going to need them, especially as you go and the years come on, and you just, you're doing your thing. You can forget about those. Keep those close by and read those as much as possible, guys. So those are the top 5 mistakes that experienced investors like myself make. Let me know if any of you guys are experienced investors. You've been doing it for years and years now, and you've made some of these mistakes, or you have any other ones to share, because we get a ton of beginners in the stock market on my channel, like a ridiculous amount, like tens of thousands of beginners in the stock market come across my channel all the time, and they would love to hear from people like myself and you guys out there. If you're an experienced investor, tell about some of your mistakes. So if you just came across this channel, you may want to subscribe. We talk personal finance in the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk stock market investing more than anything. Thank you for watching, guys, and have a great day.